With the Asian Investment Infrastructure Bank's European endorsement list growing quickly, what implications will this seismic shift in Chinese-backed financing have on the world? Dr. Pippa Malmgren, former economic advisor to U.S. President George W. Bush, shares her thoughts. What do you make of the American upset over the UK's endorsement of the bank?
Well, I thought it was so fascinating to do such a public slapping of the wrist of your closest ally. And it kind of indicated the White House got itself surprised. They weren't prepared for this because there were lots of other ways they could have dealt with it. And the fact is that many nations, Switzerland, Luxembourg, I mean, so many countries are joining in with the Chinese. And the British position was, look, would you rather have us in and knowing what they're doing or have us out and having no clue? And I think everybody's kind of sympathizing with the British on that one.
Absolutely. We're seeing a laundry list of countries, as you said, really jumping on board. So in terms of diplomatic relations, what are we looking at? Long-term damage or no?
No long-term damage between Britain and the United States, but the bigger issue is China now has 3 times the level of reserves of the IMF. And the IMF is about to lose some reserves, it looks like, if Greece defaults. So the world is recognizing that the old architecture left over from the Second World War of the global financial system is shifting and changing, and China's going to have a bigger voice, a bigger stake. And of course, the US has a problem with that because the US likes a world that depends on the dollar and American-backed institutions.
So really, Europe, as it's trying to get its economy moving, cannot afford not to get involved, wouldn't you say?
I would say it's even bigger than that. It's so interesting that both Russia and China are now all over Greece looking for assets to buy, because the Greeks need the cash, but also infrastructure to invest in, and they have the cash to do that. Whereas the United States, the World Bank, the IMF, they don't have the capital to do these things. In fact, what's really ironic is actually this new infrastructure bank isn't restricted to Asia, even though the name of the institution makes it sound like that. So they're going to be investing globally, and frankly, the place that needs the most infrastructure investment would be the United States. Quite ironic.
Isn't that funny? Are we going to see a day when everyone's going to be speaking Mandarin, Cantonese, and even the Americans really are going to have to jump on board as well?
Actually, I don't see that. But that's partly because as an economist, I'm witnessing a huge amount of the manufacturing base leaving China, and it's going to 2 principal locations, the Midwest of the United States and the Midlands in the UK. So the middle of both of the 2 biggest industrialized countries. China's wages are rising incredibly fast, and they're just losing their competitiveness. But they have acquired this massive pile of reserves, which gives them a certain power. So the real issue is the US and China are now going to be competing for influence, and that's not going to be a comfortable argument. But I don't see a world where everybody has to speak Mandarin. I think it's so ironic, everybody in China is trying to learn English.
There's no secret that China's ambition, of course, is to see the RMB widely traded as a global currency. Are we one step closer to that happening, given we have this official backing from so many Eurozone countries and beyond?
There are 2 very conflicting issues. One is the Chinese currency has not got an open capital account. That means if you make money in China, you can't get it out. So you can't transfer money in and out easily. And it's hard to imagine any currency becoming a proper reserve currency if it's not convertible.
Let's talk about HSBC. It just introduced this 2-way lever between Germany and China, where the capital that's been created in China can be reinvested in projects. So how does that become leverage to greater gain down the road?
Well, there's no doubt the Chinese are trying to move in the direction of making their currency more convertible over time. They are giving permission to Chinese nationals to take some capital out of the country. That accounts for the huge increase in property purchases from London to San Francisco to Canada, so that they can diversify their holdings. It's not actually capital flight. It's not that they don't have confidence in China. It's just they want some diversification,
yes,
just like any sensible investor does. But the Chinese are using that to test the level of outbound demand. In the meantime, the level of inbound demand is shrinking because the competitiveness is declining as their wages and costs rise. So I think their strategy is to go gently and slowly. They always play a very long game, and to challenge the US dollar over a long period of time. In the meantime, I have to say the US economy has improved. It's getting better every day. So I don't see any danger that the US dollar suddenly loses its value, as a reserve currency. But the longer game is still an open one, and we don't know who comes out the winner yet.